Okay, looks like we are rocking and rolling now. Welcome, Pat. On my end, your video looks a little fuzzy. I don't know if it's going to come out that way on YouTube or not, but it is Friday morning. You're probably a little fuzzy anyway. So.
Yeah, I had a couple cocktails last night.
Okay. Happy Friday. We're doing a little earlier today because you have a high-powered appointment today.
Yeah.
I hope you hit them long and straight. So
yeah, thank you. Well,
okay, let's dive right into it. I'm going to do a couple things. One, I'm going to talk again about inventory and where we're, because it's now a trend, Pat. Remember how we always say 1 or 2 weeks doesn't make a trend? We have a clear and definable trend right now. And I'm going to share my screen and show you what these low inventory numbers mean and some of the frustrations behind it. So we got, once again, this week, we had 3,671 new listings come on, which is actually about par with what we've been having. I'm including listings, new listings, and back on market. People, that go, okay, I think I'll put my house back on. So that's been going from 700 to 900 homes every week. So we are at 3,600 homes. We sold, put under contract, 4,200 of those. Consistently now, every week, we're losing 500 homes. And so we are at 9,490 today, which is 400 homes less than we were last Friday. So they always erode by about 300 homes over the weekend, muddle down a little bit, tick back up on Friday. And if you were to look at this like a stock, we're not hitting our other lows. So every week, boom, boom, boom. And how low is this going to get? And it's clearly pandemic driven. And I'm going to talk about that
the other day.
Yeah, but let me show you. I want to share my screen. I want to show you the MLS here. So so let's see, share the screen. So I'm going to want to go to, let's see. I'm sharing. Do you see the MLS?
Yep.
Listing there? Okay. See all these green dots? I just picked single family homes. So there's 7,350 homes over here to the left-hand side. And it's all these green dots. And that looks like a lot of homes, right?
Yep.
So now you call me and you go, Rick, I want to find a $500,000 home in Ocotillo. I go, okay, I got it. I'm on it. Let's go look. So I zoom into Chandler, and Ocotillo is my hood. So let's see what we got going on in Ocotillo. So here's Ocotillo. Look, 1, 2, 3, 4, 5, 6, 7, 8. And these are brand new builds, 3 of them up here. We have 11 homes. Now, if you get down a little farther here in Ocotillo, down by the rec center, there's some more. But you want to live here because you want your kid to go to Jacobson Elementary here, Bogle Junior High, Hamilton High School. When you look, there's only one home that's below 500,000. It's 399.9. That's the only home. All of these are 600,000 and 700,000, but it doesn't mean that there aren't $500,000 homes in this market. It just means they're not showing it. They're not listed. And the neighborhoods get sparse as you go. Look at Carino Estates, 3. Up here in the vineyards, 1. Paco Vistas, 2. So when you are drilled down to a specific neighborhood and a price point, there's nothing there.
I mean, and typically when you're taking somebody out, if they tell you, people for the most part are really neighborhood or area driven, because if you take somebody, you got obviously a buyer that's looking at Ocotillo, chances are he doesn't want to look at North Scottsdale or Tempe, or Desert Ridge. He's got a specific area that he wants to, they want to get dialed in on.
Now people, they don't want to list their homes because they just don't want people walking through them because of the virus. And this is going to get worse in the next couple of weeks. I'm we're going to see numbers in the 8,000 instead of 9,400 because they aren't coming on. And and you've seen the numbers. And I know that there's a lot of chatter that testing is way up. So of course the numbers are going to be way up, but our hospitalization rate right now, Arizona hospitals are at 84% of capacity. So they have brought in 200 traveling nurses. Banner Health did. They're testing 1,000 people a day. So it's real. It's something to be concerned about. And personally, I can tell you that my son, I won't say which one, but he tested positive, and he's been sick for over 2.5 weeks, and he's doing fine. He's just really winded right now. He did go to the emergency room on Sunday night, but it's a real thing, and it wiped him out. High fever, not just for a couple days, Pat, several days. High fever and chills. He said intense body aches, and then the fatigue hit. I mean, he didn't, and it's frustrating because I can't even bring him chicken soup, because I can't get anywhere near it. So, you're doing all this conversation via, Skype and text messages. Is one sick guy. And, what we're seeing is when Arizona opened up, there's a couple things, and you're seeing it in Florida, Texas, and Arizona. And well, wait a minute, these are hot states. I thought heat was supposed to kill the virus. Well, guess what? We're all hanging out in air-conditioned, tight spaces, and we're meeting our buddies out at the clubs and everything, and we're laughing and we're chuckling and we're spewing little microbes out, in an air-conditioned environment. The heat has nothing to do with it, and so we've spiked up. I think my son, who was at a function, got it at that function because he's pretty much hasn't been out, but did attend something where there were a lot of people around. And so I'm seeing more and more of that. I was around some family members over the weekend and met a young lady from California who was traveling over with my friend's son. And they were taking a trip across the country. And she's in Utah, and she announced yesterday that she's getting tested. So I said, well, what's her symptoms? Well, stuffy nose and she can't taste anything, which is what my son had. He said he just wanted to get some cough drops just so he could have flavor in his mouth. So the reason I bring all this up is that I think it's going to weigh on our minds easily in the next 3 weeks. It's going to affect those inventory numbers. And so for buyers, it is tough. For sellers, I'd put your house on the market on Friday. I'd drive up to Prescott for the weekend and just chill, and you'll be all done by the weekend. So, I mean, that's via
a video. You're saying, put it on the market, but also have a video walkthrough, right?
I would definitely have a 3D tour of the home so that people can do that. But the other thing that I would offer sellers too is, look, leave on Friday and we'll let showings come through while you're gone. And then I'll have the house sanitized before you get back. I'll hire a service to come and sanitize your house. And so you can come back and, to a nice, clean, sparkling house that will be under contract. So you've got to do business a little differently now. But I want to dispel some rumors that are out there too, because I still hear them. Is financing harder to get now than it was a few months ago?
No, it's not. I mean, it's really not. It's I thought it would be. Like you said, like you talked the last couple of weeks, lenders have loosened up their COVID overlays, and things are moving along pretty much spot on.
I think the reason people are grabbing onto that is that it is harder to get a mortgage at Wells Fargo, Bank of America, and Chase.
Yeah.
So I think people hear that. They think, oh, it's bad everywhere. They're the ones that said you need 20% down. You got to have a 700 credit score. But that's just the big three.
Exactly. Yeah, there's a lot more than just the big three. So yeah, they definitely have a lot
to make the news. So
exactly. I mean, Price Mortgage doesn't make the news because we're just doing loans.
Well, I can't remember who I talked to. It's about 2 weeks ago, and somebody was stunned that you didn't need 20% down. She goes, "Yeah, my daughter wants to buy a house, but you need 20% down." I go, "No, you don't." And they were shocked.
Yeah, I'm amazed at how many people still don't know that you don't need 20% down. Like you said, the real big sweet spot that I'm seeing is basically 5%. Because if you got great credit, I mentioned a couple of videos ago that if you got great credit, 5% down, your mortgage insurance for $350,000, $400,000 loan. As I mentioned, I ran some numbers for like a gentleman that was like $325, and his mortgage insurance was going to be about $80 a month.
Yeah.
And that's a great trade-off than rather putting another $30,000, $40,000 down on a house. And actually, I think I mentioned this too on the Zoom call. It's really important to know that your pricing, even though pricing does matter on loan to value as far as how much you're putting down, right now with the forbearance situation kind of being where it's at, and the fear that people are putting 5% down, they got mortgage insurance, which covers actually the lender, if they do go into foreclosure. So actually the pricing is really strong. I mean, it's actually, you get almost better pricing at 5% down than you do 80 or 20% down in some cases. So, I mean, or if not, it might not be exact, but it's not far off. So it's a big advantage. I mean, just to roll into it, I mean, to talk about the market interest rates, I mean, I saw something here just this morning that right now the 10-year bond is, as of right now, it's at 0.63. The 10-year Treasury is 0.635. And they're saying that basically any decline in interest rates is going to become from the spread, that interest rate, that risk spread that I talked about a month and a half, 2 months ago. They said over the last 5 years, the spread between treasuries and mortgage-backed security market, I'm going to get kind of technical here, but the spreads usually average about 1%, but currently it's about 1.72%. And this bodes into the fact that I had talked a couple months ago that rates are not coming down based on where the treasury is, they should be down lower. But this bodes to the fact that this spread is part of the measure that lenders believe that there's some risk in mortgages, and that's recently kept the rates higher than they otherwise would be due to the economic damage of coronavirus and the forbearances. And they say that right now that if the spread does go back to 1%, that mortgage rates, could be reduced by 0.5 to 0.75%. So
that's the low twos.
Yeah, well, mid high twos. Yeah, I mean, there's that. So as I was telling you, it bodes, this information I saw this morning bodes with what I was saying about 2 months ago, is that lenders are keeping a risk spread in these interest rates. And then also, real speaking, just on a quick thing, the jobless market obviously is showing about 47 million. It says jobless claims were up. It says eye-watering 47 million people have signed up for benefits since mid of March. They said the downward trend may not accelerate until after the benefit boost expires at the end of July. So we had talked about July and August. You're going to see obviously these retirement or the coronavirus benefits that people are getting paid out ending the end of July. So they're saying, and this news report that I saw kind of spoke to what you and I were talking about. Remember in the beginning, I said it'd probably be more of a W, and sure enough, and versus a V or U. And this one report said it's looking increasingly like rather than a V or U-shaped recovery, it might be a series of W's.
I don't see a V-shaped recovery at all on horizon. Yelp announced yesterday that on their business listings, 41% have listed that they're permanently closed.
Yeah.
On the Yelp directory. Think of that number. 41%. And we thought that 25% of small businesses would close. And here it is rocking at 41% on Yelp. So that hurts Yelp's numbers too. So it's I don't see a V recovery at all. I mean, it would have to start happening soon. States are not in a position now where they can lock down. And that's why Governor Ducey's saying, folks, you just got to stay home. He's not going to say, all right, we're going to have all businesses locked down. You just got to stay home. And if you go out, stay 6 feet away from everybody and, pay attention. So believe in masks or don't believe in masks. It's your call, but basically the numbers are out there that if you're gathering in large groups and you're not wearing a mask, you're increasing your chances. The numbers are there. And so, I mean, I think we were all pretty skeptical at first, and I was, pretty skeptical. Well, geez, I don't even know anybody that has it, but now I'm seeing more and more people that I do know that are getting it. And most of it are young people now too. And, but they're not, very few of them are getting hospitalized. It just gives you a very rough 3 to 4 weeks. Very rough. And I was talking to my son yesterday. He goes, I can't wait to just walk upstairs and not be winded.
Wow.
So
that goes, I mean, to go back, I'll jump back, but that's absolutely nuts. I mean, I know I've been, like I said, I've been wearing a mask, I finally said, hey, if the mask is the worst thing I got to wear, it's not that bad. They're not asking you to put a 50-pound bag of potatoes in your back to carry it around all day. It's not that big a deal. Yeah. But we have a comment. The forbearance has increased. It said after 3 weeks of declining totals, the Black Knight, this news service, says the number of active COVID-19 forbearance plans shot up over the past week. As of June 23rd, there are 4.68 million homeowners in forbearance, an increase of 79,000 from the prior week. So it said FHA and VA showed the largest increase, 42,000, bringing the number of forborne loans to 1.9 million on FHA and VA. That's about 12.5% of the two portfolios. So, things kind of have shifted back a little bit. And I think what I'm concerned about on the FHA side, I don't see it so much conventional, because people that bought conventional maybe might have put more money down. But a lot of these FHA plans, which I'm going to kind of keep an eye on, is a lot of these FHA plans were connected to down payment assistance programs where people basically got free money to put money down. So that's one thing that, I have concern, to keep an eye on, because, if you used a down payment assistance program to buy a house a year and a half ago, they probably didn't have much money to start with, because they got the assistance. And I think that's going to be the first, if there's any problem, any crack in the system, I think that's where it would be.
Well, we have a comment that came in and said, with the way these 450K and up are flying off the market, it's kind of hard to actually believe people are unemployed. And I think he's correct because they're flying off the market, but there are still enough people out there that were ready to buy that are taking advantage of these low interest rates. And it's not that it's a huge number of buyers. It's that the number of buyers is exponentially greater than the number of sellers. That makes sense? Mm-hmm. So, I mean, if we had 30,000 listings, these prices wouldn't be, these homes wouldn't be flying off the shelf like they are. It's just that there's a smaller group of buyers, powerful, qualified, locked and loaded, ready to go. And when a house for 450,000 comes on the market, go back to my Ocotillo example. Do you think it's only going to get one offer? No, because it's the only $450,000 home in that neighborhood. So it's going to fly off the shelf. He's absolutely correct. And so we can still have really high unemployment and homes still sell, because people that are working, that haven't got laid off, are still making good money and taking advantage of these low rates. Their car's running, they're in the driveway, they're ready to go get it. If something comes up in that neighborhood under 500,000, it will have several offers that night, because there just isn't, that Sunday there isn't going to be a new listing, right? All the listings come on Friday. So if something comes on Friday for 450,000 in your neighborhood, you're going out you're taking the day off from work and going out and look at it. And because it's not going to be there Sunday, and Sunday we don't get new listings to get at it. So that and I agree with him. It's hard to think that there's all this unemployment out there when you see this activity. But there are people that are still, gainfully employed, and they're taking advantage of the low rates and grabbing them, and they're in large enough numbers that they're making it hectic and frantic.
Yeah,
And
definitely.
it's a bad time to be a buyer. I gotta admit I had somebody from Seattle. He said, I'd like to put an offer on a house I see out in East Mesa, out by the, East Mark. I called. It was on the market day before. They already had 5 offers. All of them came in above list price. They had 17 showings scheduled for Friday, and they were going to continue to accept offers all weekend and review them Monday. And I said, "You in?" He goes, "No." I mean,
Yeah.
hard to do when you're out of town, and because you're going to have to come in, and this is when mistakes are made.
Yeah. People are frantic.
People can't waive appraisals, but they could say, "Hey, if it doesn't appraise, I'll make up the difference," right?
Yeah.
And
No,
I don't know anybody that says, "I got a great deal on this house. I outbid 7 other people."
Yeah. You'll just have to be smart about it, and I always say, for people that are tight on the appraisal, the appraisal will obviously be, if you do get appraisal, I say the appraisal will be, let the appraisal guide you in terms of negotiating. If you've got a house that, let's say, I've had situations the last several years where appraisal, the offer was 350, but the appraisal came in and say, 347. You just go back to the seller. I mean, in some cases I've had it where sellers like, okay, I got a good buyer here, but I can't fight the appraisal, the appraised value. But that's not the case. I mean, their houses are appraising for. I had just a VA. The offer came in. The offer came in for. They bought the house for $295, and the appraisal came in at $323. So, pretty crazy.
Well, the offers I'm seeing that are flying out there now are, if it doesn't appraise, don't worry about it. I'll make up the difference. And so now you're trying to write an offer on that. And the other thing that used to be popular is called an escalation clause, right? So you write an offer and say, "I'm going to give you $350,000, but I will beat any other offer that comes in by $1,000 up to $375,000." Well, when you're a listing agent and you got 5 offers that have come in and they've all got an escalation clause, you're just not going to play that game all day. I mean, just give me your high number. Just that. And I had an agent tell me that. She goes, "Just please, I've already got 5 escalation clauses in the past hour. Just give me your best number." So I went to the client and I had the buyer and I said, "What do you want to do?" And she said, "Well, I'm going to come in right here." And I said, "Okay." I said, "Here's what we're going to do right here. This is our highest. This is what we got." And we got it. Because she didn't want to do all this back and forth stuff. And
well, I get kind of the same thing on, when people are shopping for interest rates, they check with one lender, which is, it's very tough to shop for mortgage rates, really, believe it or not. To do it the right way, you would have to call three lenders within an hour period during the day, some days, because rates do move around. If you call, this is the sad fact that people, to shop for a mortgage rate, there's a certain way to do it. And like I said, if you really want to do it the right way, you do call 3 lenders. I typically, maybe 2. 3 is really going to confuse the whole situation. But if you call a lender on Monday, lender A, and then you get around to calling lender B on Wednesday, that you're not comparing apples to apples. People call lender on Monday and then they'll get around to calling another lender on Wednesday. Things change. It could change. If you're buying a $400,000 home, rates could change by, say, if the bond market's up 20 or down 20, 25 basis points or 30 basis points, which is a big day, a $400,000 home, that's a difference of about $1,200 to $1,500 in fees. So people got, they've got to realize that, hey, bottom line is going with a lender that you feel comfortable, that is obviously going to give you a very competitive rate. Because I always say that people they get one rate, they can always go on the internet and try to find something a little lower. You're always going to find that one rate that's a little bit lower. But the point I'm kind of with the appraisals, the fighting back and forth, like so the escalation clause. I've had people who said, "I got offered 3.5. Can you offer me 3.25?" And then they go back to the other lender, say he offered me 3.25. I'm like, no, I'm not going to play that game. So we get kind of caught up in that game too with people shopping rates. You know, I don't work like a car salesman. I mean, as far as I'll beat that rate by 500, you know, that fee by $500. I'm very competitive on rate and fees, but point is we do get caught that on the interest rates too with people. I got offered this. Can you offer this? It's like,
yeah.
play that game.
Well,
Anyway.
and then like, and you've told me before, you know, you got this rate. Well, how much did that cost you? People don't look at the fee end of it. You know, this this national company that does everything online gave me this rate. You go, well, how much did that cost you? What are the fees? Because I have a friend that went to a national brokerage on a house they got in, and they were really excited because they told them they could close on the 29th of May, and which was like 2.5 weeks out. And I said, I kind of doubt that. Oh, that's what they said, 29th of May, and I can get 3.1. I said, and they'd already had a bad deal with USAA. They just went dark on him. And this guy's a colonel in the Army, for crying out loud. And so lo and behold, it didn't close until June 10th. And now they weren't moving. They're buying a vacation home or their future retirement home up in Washington State. But they were quoted 3.1. I guarantee you their fees were about $3,500. And they didn't close on the 29th like they said they could. They couldn't get it done in a week and a half, 2 weeks. So it took till June 10th.
Yeah.
So it was a nightmare. I mean, so then we get in the house and
lenders have been back. What's that? I'm sorry.
I said, when I get in the house and they hadn't cleaned it out. So we were working our butt off. So he's calling me right now.
Start watching a video. But I mean, that's the thing. A lot of people go through these big, the big box, retail lenders. And, it's right now you got to be dialed in and work with somebody that's local. That's, you just can't get caught up in the call center circus because it's, especially buying a home, it does pay to get dialed in because if you got, you got to close on time because if you don't, you got 5 other offers behind that house.
Well, timing is everything. I know that the one that you just closed for me for our veteran, I gave her the keys this weekend and I said, you wouldn't have gotten this house today. It changes that fast. I said, 4 weeks ago when we wrote this offer, we got the price reduced by $5,000 and we got $2,500 from the seller in concessions towards closing costs. And you came to the table with more concessions, lender concessions. It ended up being a great deal. But I said,
it was a great deal.
None of that would have existed today. The market's changed that fast. She couldn't have got that house.
No, it was an incredible deal for her. So
yeah, it really was. They're great kids. So, well, I know you got to go to your high-powered meeting, strategy session, where you need to hit them long and straight. So it's time to say goodbye to our millions of viewers. We've probably strained the internet. I always worry about that when we get on because
it does slow down because of bandwidth. Oh, people getting on at the same time.
But I did soup up my computer. So this was my previous solid state drive. Remember when computer drives used to be huge?
Yeah.
So this thing was 256K. So it's basically, it has my operating system on it. So it boots up really quick. And then I have a 4 terabyte hard drive that I store things for NASA. But I actually bought another one that is a fraction of this size. It's like a strip. A friend of mine turned me onto it, and it has 1 terabyte of capacity as a solid state drive. And by solid state, there's no moving parts in here. So the read write's really fast. And so when I click on a website now, there's no waiting. It's like, oh, okay, but it's and editing videos and everything, so I get on my laptop and I'm really impatient. I'm like, oh God, this is slow. This took 90 seconds. So a lot of fun. So have fun today, Pat.
Yep. Have a good weekend. We'll talk to you soon. Talk to you next week.
You got, see ya.
Good information that we bet.
You
Hopefully
bet.
people glean something from it. Thanks much.